Welcome back. As we assess industry damage with regards to coronavirus and how that has played out, today we are focusing on the financial NBFC space. We join now to talk about what the impact has been on M&M Financial and the industry as a whole. Mr. Ramesh Iyer is here with us. He's also the chairman of FIDC, so we'll be able to get a better perspective from him as to what the industry really needs in this critical hour. Mr. Iyer, thanks very much for taking out the time. These are unprecedented times, and we've heard this a lot, but the industry was just about managing to get back on its feet post the IL&FS crisis, and now a total wipeout of demand because of coronavirus. So what's your take on how you're assessing the impact and what kind of steps that needs to be taken to make sure that there's not a complete falter?
So, we almost completed the year. Up to February was all over, and we also got into March with the first week. So typically what has been lost for the year is the last 3 weeks, which of course are extremely crucial. It's also important to understand the industry was resetting itself for the BS6 vehicles, so there was not too much of traction on sales as far as vehicles are concerned, because it was just clearing the inventory available and things like that. But the real fear is, while this year may sail through with whatever numbers, but what is going to happen to the next 3 months or 6 months until things get back to normalcy is honestly the real question. But yes, the volumes have shrunk. I don't think there would be any disbursement growth visibly from any of the NBFCs, as well as I think even the asset book growth could be very marginal because, March normally is a big month, and this quarter in particular has anyways been slow and low because of the BS6 coming in. So I think the overall situation is that the volumes have shrunk. The AUMs would be very marginal growth. But honestly, everyone is looking at, what is in store for the next 6 months or beyond.
Right. Mr. Iyer, obviously, these are tough times, and while you may not really see much in terms of AUM growth, any back of the hand calculation as to, how long could this extend in terms of, the demand completely getting out of the system, and also delayed repayments? Do you see the asset quality deteriorating significantly in that time period?
So I will put it as follows. Surely we, even before as we were talking, we thought that by the next festival season is where the demand could start to pick up. Once the BS6 comes in, people start accepting the price and the product. Some demand would start to pick up. Now with this impact of virus, it could even stretch a little beyond, because it's not about, just the virus problem get fixed and will it start immediately. I think sentiments will have to return to positive. People will have to figure out, what they have lost during this period. How do they recoup that? People would have liability to discharge. So I'm not too sure that people will rush into acquiring asset so very quickly until they fix their own problem. So far as collections are concerned, again, I like to put it under two buckets. The consumers who were anyway on delay because of various other economic reasons would continue to remain there, and would possibly be the repayments from those customers would have even further suffered. But so far as regular paying customers are concerned, my take would be it would be inappropriate to even call them delinquent, because we know that they are purely circumstantial as reason, and therefore one has to carve that out very separately. We have enough of customers, maybe about close to 87-90% of the customers who've been paying monthly installments on time. Now, if they have not been able to pay 2 installments, the third installment gets default, they would actually be classified as an NPA unless there are some directions come from the regulator. But they are not really in the nature of NPA. They are just circumstantial delays of a very specific nature. But yes, overall, the collections have been weak. I mean, if you look at March, I think almost the whole month was virtually not very active in many of the locations. And now with last week, most of the shutdowns have happened in many states and now the entire country. I think clearly the good part of March has been lost, and that would for sure push up the numbers as far as NPAs or the overall collection efficiencies are concerned.
Right. So just to get in a sense from you, your 9-month FY20 net NPAs were about 6.7%. Now, obviously, in quarter four, the entire month of March is gone. So in quarter four, your numbers, even if you do see, some directive coming in from the RBI, can that be, taken in for the month of March, or that will get pushed to the next quarter?
Honestly, I'm not in a position to comment on that. We expect that if there is any direction given, the direction would be as to how to categorize NPA for 31st March based on the circumstances. And maybe they'll give some specific direction of, maybe give moratorium to the consumers and not call them delinquent, or maybe even push the NPA provisioning norm from 90 to maybe 120 or 180 days. So honestly, all of us are waiting to see what is the kind of direction that we are going to get. I would imagine that whatever direction will come, that will be to classify the book as of 31st March.
Mr. Iyer, good morning. Neeraj here.
Hi, morning.
One is what happens to the company, and I guess some of these answers will better be served once we have some direction. So maybe we can do another chat in about 10 to 15 days, depending on when it comes out. Two is, how is the urban versus the rural situation looking like? Because I think Aditya Puri was making this point earlier. Somebody else made the point in a column as well, that we haven't seen this reach the rural shores. There, the spending is still maybe holding out whatever possible is happening. And if it does not reach there, then we might actually relatively be better off. What are your thoughts? Because you got the pulse of this market better than most people that I know.
So my take on this is exactly the same. Until the total shutdown happened, and as we were talking to consumer, even in the states where there was a shutdown, we did not hear from the consumer saying we absolutely have no money to pay or whatever. I think there is this little uncertainty in the mind of what is in store for future and how long is that uncertainty going to be. And that's what is holding back people from even discharging liabilities, what we saw as we were interacting with them in the past. So clearly, I think, the problem that we see in urban, fortunately, it is not as severe as we see it in rural. I think enough administrative interferences and directions have come in order to be able to even control and curtail it better. So, and if April, May, normally the harvest season, and if the crops, which we do definitely expect would be good, and if that cash flow gets released into the hands of the rural consumers, and if the monsoon pans out to be at least average plus, I think the rural story would look more greener for sure and much faster.
Mr. Iyer, we've had in the past demonetization. 2013 was a peculiar period too, and then the GFC goes back to 2008. The current situation, and maybe not just the current situation, but if it snowballs into something bigger, is the closest template the GFC from a business perspective? Because a lot of market participants are looking this as the closest template to the GFC. For you as a business manager, is this close to GFC? Is it close to Demon? Is it close to 2013? Or is this something that you can't quite fathom if there is a historical template too?
I think, there is honestly no historic template to this, because it is not coming, the disruption has not come from the commercial side where, people say the business is very low and we don't know, we'll have to wait types. This is more about, how is the individuals going to be impacted? What is going to be the overall impact? When will it all start again? And then how will the confidence be rebuilt in people to be able to do what they were doing? So I think this is slightly of a different type, and it's come also at a time when there were weakness in the overall economic activity as well. So I think it's kind of coupled the two together. This is more about people's uncertainty, sentiment weakness, rather than really the commercial side of it, where one can still venture, take some risk kind of a situation. I would think that these are times where one has to honestly not look at growth or asset quality or whatever. I think these are the times where one would want to really work very closely with every stakeholder in the industry and try and find some common solutions rather than trying to find individual business solutions.
Okay, now I know that, and I urge you, Mr. Iyer, that we should talk again once more once these measures, or if whatever shape and form come out. But I believe the NBFC Association has sought a 3-month moratorium on EMI payments. Let's assume this gets done and a few others measures get thrown in as well. I think the fear in the minds of the market is the unknown, whether the NPAs can spike up disproportionately higher. Uh, to your mind, if one or two of the measures that companies and the associations are seeking do get passed, not all, because of the limited balance sheet that India as a country has, do you fear that asset quality for a couple of quarters could actually show a really a sharp spike?
So, if the 90-day moratorium do get accepted, then I think the NPA would not spike up because this whole contract should get rescheduled by 90 days is what is the ask. And that reschedulement should not be considered as, the reschedulement done for failure of consumer, but more because of the situation, which means the 3 installments would get rear-ended and therefore one would see the NPA levels to be where they are and not really spike up, right? And the ask along with that is that if the consumers are going to be given 90-day, which means the NBFC's cash flows will have a pressure, the ask is, can the banking system also look at NBFCs to get a similar moratorium as banks consumers? So therefore, the overall cash flow also gets well handled. So my take is if the 90-day moratorium does come through, it will actually help the situation of even telling the consumers, okay, take 90 days to start your payment and then on pay regularly. And therefore, the NPAs would not really spike and the collections would look much better. The asset quality would look actually better.
Mr. Iyer, I actually wanted to take that point forward and you briefly alluded to it. So when this is from the borrower's standpoint, from your standpoint, from the company's standpoint, any obligations that you have to fulfill in terms of making payments, in terms of honoring, the debt market obligations, does that happen at the pace that it has been happening, or you are also facing challenges and you also want a little bit of a respite on that front?
So I think there again, one has to differentiate between large NBFCs backed with good promoter backing and etc. We would possibly all be in a position where we can discharge our liability on time. And fortunately, that would be possible with our own cash flows for simple reason that the disbursement side is not aggressive, right? Even though the collections would be a little low, but even the disbursements are not happening, and therefore all cash that you have will for sure be used for discharging liability. And this, I would put, is something very similar to what we saw in 2008 kind of a situation. And whereas maybe smaller NBFCs who are anyway not big in business but were depending on their monthly collections to be able to meet even their monthly liability discharging, etc., possibly would look for those kind of support also from the banking system. But as NBFC, we don't see a default coming from discharging the liability side because everyone is cautious and careful that ratings are important for NBFCs even going forward. So everyone would first allocate the available cash to discharge liability before they can even think of any business.
And therefore, obviously, the question of needing funds right now is not relevant, right? Because as we see it, even AAA rated bonds in the bond market, the yields have really spiked a lot. And now raising money or raising any form of capital would come at a price.
I would think so. See, if the business side is not shaping up, people would not borrow aggressively at this stage. Maybe there will be some small borrowing to meet some gaps or whatever, but definitely not for the purpose of business. And therefore, the pressure on the cost would not be felt so much by NBFCs, it might take.
Got that. Mr. Iyer, it was a pleasure chatting with you. Thank you so much for putting things into perspective as to what business damage could this particular virus
I would
bring
just
upon.
wanted to add one point if I have half a second, which is,
Yeah.
these are times where we very strongly believe that, as I said even in the beginning, to partner with consumers and give them alternate means. And we as a company, and I'm sure many as NBFCs would have done this, is give alternate channels and source of ability for consumer to repay their installments, because not all of them don't want to pay, just that they're not able to come out and meet people, go to the banks, etc. So therefore, the digital means have been really put to use. A better technology has been put to use. And more importantly, a lot of customer insighting is happening, understanding the real problem. And I think new process, new models possibly could emerge out of all this insighting that's happening around.
Indeed, indeed, Mr. Iyer. Thank you so much, sir. Really appreciate you taking out the time, and that's probably the need of the hour, and that's where much of it's going to lie, digitization and then doing things online. That's the key at this point when we're talking about social distancing. But the markets are holding extremely strong, Neeraj. We've got almost a 3% bump up for the Nifty 50. The Nifty Bank is up 4%. So for a change, it's leading the rally today.
Well, let's wait and watch if that lasts. But for now, it's a wrap on this broadcast from Devin and me. Thanks so much for watching.
According to a recent report, women today contribute nearly 74% of real estate